Hey guys, welcome back to my channel, No Anxiety Investing, where you can invest with peace of mind. Today we're going to talk about one of my favorite stocks, Scotiabank. Now, it's one of my favorite stocks because it's a Canadian bank stock, and they've earned my loyalty by always paying dividends and never missing any. They bought my loyalty, that's all there is to it. That's why it's in my top stock list. I love them, okay? Now, right now we're looking at a yield of 4.64%. Some of you might be thinking, well, it was yielding over 6% during the economic downturn down here. This is the one-year chart, and when it was down here, it's like 6.6%. Oh my gosh, that was so high, so gorgeous. I picked some up, I'm not going to lie to you. But that time is over. We need to reevaluate things starting today. And with this yield of over 4.5%, you can feel good about this. This is still high. Like, this is a good return on your money. What are you going to do with your money? Are you going to put it in a high interest savings account and get 0.5%, maybe 1.5% from one of those online banks? That's garbage. That's absolutely garbage, guys. You're getting over 4.5% here with Scotiabank by being an investor. You're being rewarded, and they're going to be raising it later this year. Now, it hasn't been announced yet. I talked about that in my Canadian bank videos. It will happen. Mark my words. So this will be closer to 5%, okay? So it's a good buy here. Now, I've been dripping since I've had this for about at the $50 mark, something like that, 55, and I'm dripping a free share every quarter. So I love watching them drip in, so I yield more and more income, okay? And this is a chart of their annual dividend growth. This is what I'm talking about when I'm talking about dripping more and more, okay? Now, if you look at 2009, they were paying $1.96 a share, and essentially it's been going up 6% a year over that time from 2009 to 2020. You see this chart's going up and up and up and up, and it stalled right here from 2019 to 2020 because there's a ban on increasing, okay? We're going to be breaking this ceiling. We're going to go up here by the end of the year. Q1 is the only report that's been out so far. That's why it's down here in red. We're going to be building, and it'll go up by the end of the year. So that's what that chart is trying to indicate there. Now, I went through their annual report, guys, and I'm going to just highlight some interesting information. And I'm not going to go over all of it because it's like 200 pages. This thing was absolutely ridiculous. So one of the things in the annual report that I thought was pretty interesting, and I'm not sure why they included this, is the total return to common shareholders. This would scare people off. If I was a CEO, I would have told them to take this out of the report. But let's take a look at it here, guys. All right, so these lines represent the share appreciation plus dividends reinvested from 2010. Okay, now the red is Scotiabank. The dark gray is the bank's total return index, and the light gray is the composite total return index. All right, now as you can see here, Scotia underperformed all of them, unfortunately. I don't know why they're advertising themselves like this. I would delete this. Anyways, so this is the truth of the matter. They've done some underperforming over this time, but I think the future is still bright with them. Don't let this turn you off too hard. Okay guys, here's an important slide. This is the slide that's going to sum up why the Bank of Nova Scotia did much worse than its peers in the Big Five, that is. Okay, we're going to look at where they get most of their money, the Canadian banking segment. Now, all these figures are in millions here. So there you go, 2,500 in 2020. We're going to compare it to the previous year in 2019. It's almost 3,500. Okay, that is significant. That's a big blow, but it gets worse. Wait, there's more. Okay, international banking, guys, 1,000 for 2020, and in 2019, 3,000. All right, this is a big hit. The Latin America Pacific Coast Alliance, they lost a lot of money with these guys. They got a big investment over there, and I kind of like it. People have mixed feelings about it, but at least in the last year they got creamed here, and this was the biggest problem. This is a large contention point here in the earnings report, and this is why we're not seeing the share appreciation that we're seeing in the other Big Five banks. Now, their global wealth management did slightly better. It's almost nothing, but it's slightly better. It's good to see something going up. But global banking and markets was down again, 1,500 to almost 2,000. So if you look at the total reported net income, guys, it's a big difference. 2019, we're looking at 8,798, and 2020, 6,853. 53, pardon me. So we're looking at other banks setting all-time income records, and Scotia's just suffering. They're just trying their best to recover. Now, the biggest part was the international banking. This has been profitable in years past. It's been a great segment. I like it. I like the diversification. Bank of Nova Scotia, they're in less countries going forward. They're trying to consolidate. I think they were in over 70 countries. Now they're trying to focus on 30, trying to get that consolidation, trying to get the name recognition there. I like this idea better. They're not putting all their eggs in one basket, just Canada. They're spreading out. This will be profitable in years to come. I'm not too worried about it. So it's a little bit of a blip on the radar here. All right, guys, here's the 5-year chart. I just want to touch on this quickly. If you look here, we are still not at an all-time high when all the other banks, Canadian banks, are. So that tells you all you need to know. We went over why Scotiabank is lagging its peers. It's still the highest dividend paying bank currently at 4.64 like we talked about, and it will go higher. It's still a buy in my books. Don't get too turned off. I know this review is a little bit negative. I'm not trying to highlight negative things. I'm just showing you the important information. You got to make your own decisions. It's still a buy. I'd buy CIBC before I bought this. Definitely TD. Definitely Royal. BMO is a bit of a toss-up. They've done better, but we'll get into BMO in another video. This is a forever hold for me, guys. I hope you buy in. Have you bought? Have you sold? Let me know. I recommend it to you though, guys. This is a buy for me. It's great for a dividend income, and I hope you enjoyed the video. Quick review. Join me in the next video. Don't forget to like and subscribe.